We'll start with introductions. Kayla, could you introduce yourself to the group and then maybe tell us your role?
Hi. I got to soup. You did? Okay. They call.
Or actually, we'll just start with our introductions. My name is Bertha, Prince Energy Program Manager for CEMAI and Vista. We'll have Tashina introduce.
Good morning, my name is Tashina Duddle. I've been working with Bertha on some of the CEMAI work, and we've been doing some of these Zoom sort of PowerPoint presentations around energy project opportunities for communities in the YK. Good morning.
Do you want me to go next, Bertha?
Yeah.
Okay. My name's Connie Fredenberg, and I've been working with communities around the state since 2002, starting out putting in prepay electric meters, and then learning about PCE and how to help folks maximize their PCE. And that's what I've been doing for the last dozen years is pretty extensive work with utility clerks to how to do PCE and how to get the most out of it.
Thank you, Connie. Kayla, are you able to hear me? Are you able to hear us? I put you on mute. Kayla?
Yeah.
Okay, we'll just move on.
Kayla, how long have you been working for the utility there? Is she the utility clerk, Bertha?
The assistant.
Okay.
I don't know if she's able to hear us. Or...
Sounds like it's noisy where she's at.
Kayla?
Oh, it's here now.
Kayla? Okay, let's just move on to the, we've done the introduction. The PCE rate setting and reporting. I sent out the attachments this morning that Connie updated. Hopefully,
it looks like
Kayla, you were able to get those, and if you're able to print them out and have them handy.
And the only one that you really need to print out is the one called Data for Rate Analysis, PCE Prediction. Those are the only papers you needed to print out. And you don't have to have your extra laptop with Excel. because I'm just going to demonstrate it for you. It was too time consuming and confusing to try to have everyone do it with me.
Okay. I did the brief introduction about myself this morning. Christy Williams is the Government Relations Manager for Calista Corporation. Natalie Hansen is the Executive Director for Navista. Meet our partners and technical service providers. Brian Hirsch, Tim Leach, Devany Plentovich, and Tashina Duddle. The purpose of CEMAI, in 2016, Calista Corporation received a grant from Department of Energy, Indian Energy, to establish an intertribal energy providers network. Our purpose is to reduce energy costs in the region and improve operational efficiency and assist our people in understanding energy needs of the region. Our goal is to provide rural energy best practices, economies of scale, and improve operational efficiencies in the region. Our objectives are to identify community, regional, and sub-regional needs, provide access to multi-level expertise to address existing challenges, develop specialized training programs to build local capacity, nurture the creation of regional support networks, increase access to regional, state, and federal energy initiatives, and align the YK Delta energy and economic needs and reduce energy costs. I'll hand this over to Connie. Do you want to?
Sure, I'm ready. If you'll advance slides for me, go ahead. Oh, that's a picture of Kokkinok for anybody who's interested. Right on the south shore of Lake Iliamna, a beautiful part of the state. Okay, next slide. All right, so as everybody is fully aware, it is not cheap to make power in rural Alaska, and power cost equalization is what makes it more affordable. But your community counts on you to do it well, because your reporting is what the RCA uses to set your PCE rate. So here's some things that you can do to make sure that you do it as best as possible. You read all your customer meters accurately on the same day each month. And I know sometimes weather won't let you go out on the 30th of the month or the 1st, but you know, try to keep it the same time of the month each month, and make sure you read all of them on the same day. Don't do half one day, half the next, because that's going to affect your line loss. I have a spreadsheet that I've provided all you folks to calculate your fuel efficiency and line loss monthly. And I always, I think you should do it every month, because that way, if you notice that your line loss is higher than normal or your fuel efficiency is lower than normal, that it's either a math error on your part or a meter that was read incorrectly, or something's wrong at your power plant, or something's wrong in your distribution lines. And you can catch it even faster than the operators sometimes by just always calculating fuel efficiency and line loss each month. And you'll learn how to do that through the exercises. And document all fuel and non-fuel expenses. Don't miss anything. Keep the invoices. Keep them organized and easily accessible, because when the RCA reviews your annual report, they want to look at that stuff. They're going to ask you to prove those numbers you put on your annual report. Then you do your rate analysis, and make sure that your rates are high enough to cover all your expenses, and that you've documented all your expenses in such a way that you get credit for them to maximize the power cost equalization subsidy for your customers, and also make sure you've got enough money that your utility's collecting enough over and above your costs so that you can set aside some money to save for repairs and maintenance, and preventive maintenance being the most important kind of maintenance at your power plant. Make sure they're changing the oil and changing filters regularly. Make sure they've got the filters and oil that they need so that they can do that. And then if you guys have an annual meeting, or, and I recommend people do this, you explain to folks how you arrived at that rate so they understand why you have to charge what you charge. Next slide. So this data summary table, the year-to-date spreadsheet, is what I consider critical to keep up on. Next slide. So at the bottom of your monthly ledger, I always recommend you keep a table like this, and I can help you set this up on your ledger if you don't already had it. But you ladies in Tuluksek, I did this for a former clerk. I'm drawing a blank at her name right now. But if you need help making sure that it's collecting the information right, I can help you do that. But this just collects the information from the customer ledger that you need to do your utility monthly report to AEA. And it goes on this year-to-date spreadsheet easily if you've got it at the bottom of the spreadsheet like this. Next. Oh, I was just going to comment that the RCA standard for fuel efficiency, you should double check what is your fuel efficiency standard. You know, it depends on how many kilowatt hours you generate each month, each year. That's how they determine your fuel efficiency standard. And you want to put that on the bottom of your ledger so that you're aware, you don't forget what it is. And on this one, I can't remember what community it is, but you can see that it's the RCA standards in that yellow rectangle there. RCA standards are 10.5 kilowatt hours per gallon of fuel, and line loss is 12% for everybody. And line loss, just to explain it, is the total number of kilowatt hours you generate. You'd subtract what was station service, what was used in the process of generating that power, and then you subtract kilowatt hours sold from that and divide it by kilowatt hours generated. And that's how you come up with that percentage. And what that means is, like, everybody has line loss because electricity traveling through those lines is heat, and it gets lost as it travels along the lines. But there's other things that could cause it. Like if you have a transformer that's going out or on and doesn't even need to be on, they use power, and you don't. Oh, are they able to hear me, Bertha? Hey, Kayla, nod your head if you can hear me. Oh, they can't hear, can they? Oh. I'm going to wait till they call in by phone to be able to hear, Bertha.
Okay.
And I'm also going to say that these ladies are new, so I think just the PowerPoint is good for them today if we don't get through everything, because it's going to be a lot of information otherwise.
Tashina, are you able to see the email with the phone number?
Did you just send it, or is that earlier
I think
today?
in the
In the invite.
I wonder if you could share the phone number, because I can't pull up my email right now on the screen.
Just put it in chat.
Oh,
Look,
yeah.
Tina could hear us, but she can't see.
Oh, huh. And then the
Hi, Tina.
passcode. Okay. Thank you, Tashina.
Yeah.
So Tina, which one are you? The owner?
No, that's the meeting ID. That's not the. That wasn't the phone number.
That is the
Maybe
phone number.
Oh, was it? Okay.
There's a phone number and then the meeting ID passcode.
Oh, okay. I missed the first one.
And then now there's a bookkeeper one. So Tina, which one are you? The bookkeeper?
She's owner. Oh, I mean, it says owner on her.
How many questions?
Oh, look, there she is. There's somebody.
Oh, now we could hear them.
Okay, who is?
Oh, no, that's the same ladies at the top. They're on twice.
Yeah. We just had to log in on a different laptop.
Oh, okay.
I think we should start over, Bertha, on my thing at least.
Yeah.
Now we could hear you, ladies.
All right. Okay, you can go to the next one. I just pointed out that's a picture of Kokkinok on Lake Iliamna.
So since you guys had technical difficulties joining us, could you introduce yourselves, your name, your title, and your role is?
I'm Christina Polka. I manage the utility. I'm her assistant.
Where's Tina?
Christy.
Oh no, there's a Tina from Napakiak.
Oh.
Oh, I see it. I see her name down there. Hi, Tina. She's the bookkeeper. Okay.
Okay.
All right. So next slide. Okay. As everybody knows, it is not cheap to make power in rural Alaska, and power cost equalization is what makes it more affordable. But if you don't do it right, you won't get much PCE. And so what I'm going to try to help you ladies do is get it right so you get as much as possible. And some tips I would give you is every month, read your meters on the same day, like the 1st of the month or the 30th of the month or 31st, you know, last day of the month, but do every meter in the village on the same day and get your power plant readings from that same day as well. And this year-to-date spreadsheet that I'm going to give you ladies is a good way to, you enter that information and it will automatically calculate fuel efficiency and line loss each month. And you want to pay close attention to that because, I mean, sometimes when they're out of range, it's because you made a math error. I've done that plenty of times. So you go back and you check your math. You make sure that your meter readings are right. Like sometimes there's a multiplier on a meter that you might have missed. The school, the washateria, those are places that often have multipliers on them. So make sure you've accounted for that. And if you don't have a math error and your fuel efficiency is low, or you've got a high line loss, let your operators know so that they can figure out what's the problem, because you might see it before they do. And line loss problems are often things like transformers, you know, those big things on the top of the electric poles that have lines going out to each house. If there's no houses connected to a transformer, turn it off. It uses power, even though it's not doing anything for anybody. Yeah, there's sometimes you've got people, how was that one village where kids had put a paper clip into the jaws of a meter. I don't know how they didn't die doing it, but they had their own little teen center inside this abandoned house. They had boards all over the windows and a lock on the door, and nobody knew they were using power at that house. And so we turned off that transformer, so that house couldn't get power anymore. But what I always recommend is that you put a meter seal with a lock on it on any meters bases where nobody lives, so that people can't do that, use power you don't know about, because the RCA is going to punish you with a lower PCE rate if you have high line loss. Make sure you keep track of all your invoices and every expense that you spend that's related to the electric utility. If you cut brush alongside the road so that it doesn't touch the wires, that counts. That little part-time job you gave somebody, make sure you count how much that cost. If you have a grant to do work, grant funded expenses aren't allowed, but your contribution, like even if it's in kind, you loan them a four-wheeler while they're there. If you can count that rent to for the four-wheeler, even if you didn't charge them, that's called an in-kind contribution. Keep track of all those expenses, and the grant report is where those things are tracked, because lots of grants have in-kind contribution requirements. That's your proof that you'll give the RCA that you spent that money like that, or that you made that contribution. So be sure to document all fuel and non-fuel expenses. Keep your invoices organized so you can easily find them, because the RCA is going to ask for them. They don't just take your numbers, even if they're in QuickBooks. They want to see invoices to prove that you spent that money. And then be sure you set your rates high enough. You can set your rates too low sometimes and lose PCE. Leave it on the table because your rates aren't high enough to get the higher PCE rate. And you also want to set your rates high enough that you can save a little bit of money for future repairs and replacing equipment. And if I always encourage folks to have a meeting once a year where you explain your rates to your customers. You can show them this rate analysis that I'll show you how to do. You can show them that so that it explains why the cost is what it is. And then always encourage and incentivize your operators to keep up with preventive maintenance, because that's what's going to save you the big repair costs. Long as they're changing the oil and changing the filters regularly and watching for oil leaks on equipment, they should keep their equipment clean so they could see if they got an oil leak. If your power plant's all dirty inside and the engines are covered with old oil, you won't know if you got a new leak. So make sure they've got enough money, or not the money, but they get the inventory, that they have enough lube oil and they have enough filters to keep up with their preventive maintenance. Okay, next slide. So this year-to-date summary table is what's going to help you be prepared for your annual report and keep up to date on fuel efficiency and line loss. Next tab. And it helps you do your rate analysis too. So I always put this at the bottom of the monthly ledger. That way it's easy for me to get all the information I need from here to put on that utility monthly report that you send to AEA. It's all gathered right at the bottom of that ledger. And I even set up a formula to calculate the fuel efficiency and line loss on there so that you're just looking at it right away to pay attention. And this helps you catch your math error. If you see you have a line loss of like -6, you can't have negative line loss, because that means you sold more kilowatt hours than you generated, which is physically impossible. So then you know you got a math error. And a lot of times it's a missed multiplier on a meter. Okay, next. So this year-to-date sheet that I'll give you guys is set up already. The shaded area there where it's got generated, sold, and line loss, those calculate automatically. So don't ever overtype those shaded cells because you'll mess up your formulas. But that table at the bottom of the ledger has all these numbers on it, so it's easy to transfer them to this sheet. And you're going to want to keep this thing up to date every month till you get to the end of the year. And then this helps you fill in page 5 of the annual report real easy. You don't have to go back through all your ledgers and try to recalculate everything. It's just there if you keep up with it. Okay, next slide. So this is on that year-to-date sheet. I also track kilowatt hours sold, what you billed, how much you collected by rate class throughout the year. And this is really useful information because when you get to the end of the year and you can see what you charged per rate class and what you collected per rate class, that's how you know who's not holding up their end of the bargain. You know, like if you got real low collections for community facilities, which I have to sadly say I see a lot, because a lot of utilities, if they're owned by the municipality, they'll say, well, why should we pay ourselves? You know, we own the community facilities, why should we pay ourselves? Well, it's because everybody else has to pick up the slack. If you don't pay the community facility bills, you have to make your residential and commercial rates higher in order to compensate for that. So, you know, when you go to explain things to your customers, if you have an annual meeting and you can't show that you've been paying community facility bills, your community has good reason to say, hey, you know, pay, so we don't have to pay more, because you still have to collect enough to cover all the costs. Next slide. Okay, the fuel report to the RCA. For folks that are new, you may not know, well, when do I have to turn one in? I have no idea. And if you look on the RCA website, there's nothing on there that's going to tell you when your fuel report is due. So you have to call Brenda Cox directly and ask her, and that's her phone number on there, so that you could call and ask, when do I have to do a fuel report? Next page, slide. And that's a picture of the fuel report, and off to the right in blue are directions for what you put where. And I always recommend, and do it in Excel, don't print it out and write on it, because this automatically calculates for you also, and they have protected the cells so that they're not shaded, the ones with formulas, but you can't write in them. It won't let you write in them. So I always used the last one and then I just clear the information about the reporting period purchases and the last approved fuel cost and inventory, so that all the stuff at the top is already filled in. Oh, and fuel storage capacity in gallons. If you don't know that, your tank farm, I mean, if you have to, you can just go out there and look at the tank farm and look at the tanks. It says right on the side of them how much they hold, so that, you know, you can know what number to put there if you don't have one that already has it. Okay, next one. And this motor fuel tax, this is what I see new clerks often don't realize. You have to submit a waiver at the beginning of the year, every year, to let your fuel vendor know you're buying diesel fuel for generators, stationary generators that make electricity, so you don't have to pay that motor fuel tax exemption. And this is an invoice where the utility forgot to send in that waiver form, and they got charged. It's 8 cents a gallon. It's not cheap. So be sure you file that waiver at the first of the year, every year, to make sure you don't have to pay that. And I'll give you one of those forms as well, so that you've got it. I don't, Tuluksak, do you guys know, did you file that waiver at the beginning of the year?
I'm not sure if that happened because
Well, because you weren't there, were you? Well, look on your fuel invoice. When you get fuel, look on the
Because I've-
invoice.
I've never heard about a waiver before.
Yeah, that a lot of folks miss that when you're new. If the person before you doesn't, fill you in, that's an easy one to miss, but it's 8 cents a gallon. And if you're buying a lot of fuel, that adds up. And the RCA won't count that as an allowable cost because they know you weren't supposed to pay it. And if it's your fault that you didn't file that waiver, but you can get your money back if you forgot to do it or someone didn't do it, you can get it back, but it's a big old bunch of forms, but I can help you with that too, if that happened. Okay. Oh, and always go 4 digits out. When you are writing in the price of your fuel, don't round it off to just 2 decimal points. Go all 4 because it makes a difference. It can get you a little bit more money. Okay, and this is do either of you have to transport fuel? Now, I know you don't, Tina, but in Tuluxac, does your utilities fuel, like when the barge comes and offloads, do you have to truck it anywhere? Seems to me it just stays, okay. So let's skip over this. They don't have to do this part. So next slide, Bertha. Yeah, next slide. Okay, now let's get to the most important thing. Well, there's lots of important things, but this is a critical thing, the annual report to the Regulatory Commission. This is how your PCE rate gets set. The numbers you put in here are what set your PCE rate. And they look at all your costs, your line loss, fuel efficiency, and your customer rates when determining your PCE rate. Next slide. Okay, so this is page 4. This is the income statement. I always recommend you get your sales revenue from your year to date. And the year to date should be populated with numbers that you, like when you sell electricity, when somebody comes in and pays their bill, you should write a receipt and you should keep track of that. And I highly recommend you put that on your customer ledger when people make payments. Don't just count on QuickBooks because sometimes QuickBooks gets boogered up. Okay, like depending on how you enter your payments, you could end up like just tracking what you billed, but not what you collected from QuickBooks. And, there's a Patty Crowfoot can help you with QuickBooks. Does everybody have Patty Crowfoot's hotline number? Because I can send you that if you don't. And anytime you have a question, oh, good, Tina, you got it. Okay. Oh, let me just put it on here on the chat. Anytime you have a QuickBooks question, she can help you, guide you through it. Give me 1 second here. Okay. Her phone number is 440-0242. And you can, the times that this hotline is available is Monday, Tuesday, and Thursday from 10 to 3. And it's free to call. So you don't have to pay for this, and she can guide you through how to do it. But get all the other expenses from your QuickBooks profit and loss, and be prepared to justify every number you put on here with an invoice and proof of payment if Brenda Cox should ask you when she reviews your report. And she doesn't review your report every single year. She only does it on average every 3 years. Well, they're supposed to do it every 3 years, but I've seen them go as long as 7 if you don't ask them. And if you have a year where you've spent a lot of money because you had some major repairs to do, ask for a review, even if they reviewed you the year before, because if it looks like you're going to get a higher PCE rate, it's worth the $471 they charge to review your report. Yeah, oh, and Schedule A is for the miscellaneous stuff. Like your miscellaneous revenue would be PCE payments. And when you enter a number on Schedule A, which is page 4A, it automatically populates the other line item under operating and administrative expenses. And like some things that would be an operating expense, miscellaneous thing would be when you buy antifreeze. Like there's no line item on there. There's fuel expense, purchase power, generator oil, generator filters, and then repairs, but they don't have anything for antifreeze. So you put that as a miscellaneous operating expense. Your G&A, what is that? General and administrative expenses, and other expense for that would be like your phone, how much you pay for your phone bill, internet. Some people put stipends on here, but the RCA really wants you to put those in personnel and take taxes out of them now. But if you don't, you know, you can still get away with putting them here on G&A expenses. Oh, and if you share an office with other departments and say the environmental office pays for the phone bill, well, claim a third of it, you know, or whatever percentage you think is due the electric, claim a percentage of it, because all these expenses make your PCE rate higher. And if you share staff, like if somebody works as the tribal administrator, but also helps do something for the utility, figure out what percentage of their time. A lot of folks use 25% or 33% of that person's salary, and they'll add it in with the power plant operator and clerk salary under personnel expenses. Because it's a true expense. That's what your community is paying for electricity. So it should count towards getting your power cost equalization rate higher. Okay, next one. Oh, there's a long-winded, more explanation. It's the same stuff I was talking about, like outside professional service. Most folks don't have lawyers, but if you did have to have a lawyer help you with something, count him. Accountants, if you use outside accountants, engineers that come out to work on your power plant or, you know, help you out, technicians that come out to work on it. And insurance, you can put workman's comp insurance there. It's better to put it under personnel, but just be sure, you know, you've got the invoices and you can show payment, and it's not a big deal if you've counted it under general and administrative, just so long as it's documented. Office supplies, if you share an office with people and they buy all the printer paper, ask them how much they paid, and you can count a percentage of that. Let's see. Travel should be related to the utility work and training. But if you send your utility board to a training, I know one utility sent their board members to one of those Alaska, the corporations, you know, they sent them to a corporation board training, and that counts for utility as well. Because we're not having any, there aren't a lot of energy, there's no conferences anymore, but when they are happening again, you can count sending people to the Rural Energy Conference, sending people to AvTech. If you go to a PCE training, those things all count. Bad debt expense. A lot of times people don't pay their bills, but if they're still there and still alive, the RCA won't let you count that as bad debt because you could still collect. But if somebody passes away or moves and you can't find them, you can write that off. That's an allowable expense. RCA fees. When you set up your QuickBooks, try to set it up with the code things to these. They call it a chart of accounts. Make your chart of accounts for the electric utility match this, because that way when you come to the time to do your report, it's really easy to then just like spit out that profit and loss, it's going to match this. Otherwise, what I've had to do with a lot of utilities is ask them to, what do they call it? You export the profit and loss as an Excel spreadsheet. You can do a detailed profit and loss as an Excel spreadsheet, and then you have to move things around to the right categories, which is painful, but possible. So it's always better to have your chart of accounts set up properly, and Patty Crowfoot can help you do that. Depreciation, that's a big deal. Keeping up with depreciable assets. Now we know you can't do grant funded things, but like I said, I think when no one could hear me, is that if you have in-kind contributions to grant funded projects, that in-kind contribution counts, even if it was, you know, like I said, it was, you might contribute cash, but if it's, oh, you let them stay somewhere and didn't charge them, or you let them use a truck or a four-wheeler and didn't charge them, that has value. And your grant reports will reflect that value. That's your backup for this depreciation thing. So grant funded equipment can still get a little bit of value for you. Amortized, that's just a word that it's for things that are like if you bought lube oil enough to last 2 years, the RCA will say, well, you're never going to use all that in 1 year. So they'll make you divide the cost up, and that's called amortization. They make you put it on the depreciation page, but instead of being a years long thing, it'll just be for 2 years. And they'll do that with filters and anything you buy more of than you could use in 1 year. Okay, next. And this is how the year-to-date spreadsheet helps with your annual report. Off to the right is the year-to-date spreadsheet, and I just show, oh, you just like copy that whole thing under kilowatt hours generated and paste it onto the annual report. And that helps you fill this page 5 out in like 2 minutes compared to having to go back through all your monthly reports to find out these numbers. Okay, next. Oh, what kind of things have to get depreciated? Pretty much anything that costs more than $500, Brenda Cox might make you depreciate. But these are like specific things, like if you build a building, you buy a new computer, you got a new generator. If you overhauled a generator, if you fixed your distribution system, you bought new meters, you bought a truck for the utility or a bucket truck or something. Yeah, all of this stuff. Oil spill cleanup, may you never have to do that, but if you do, it has to be depreciated. And I've pretty much talked about the rest. Next. And this is the RCA. They have a list of how long they think things should live. I disagree with some of it, but that doesn't matter. They still use these years. Like a generator, they're supposed to last 14 years. You buy a new generator. I'd say it's more like 10, but they make you depreciate them for 14 years. And always use the lower end number because it gets you the bigger bang for the buck when they do review your report. Like transformers, it says 20 to 25, use 20. Same with meters. Vehicles, use the 4, don't use 6 years. And same with training and oil spill cleanup. Next. And this is what your depreciation schedule should look like. The form they use in the RCA report form, even they don't use it. I don't know why they keep it on there because they don't even use it. So I make it a very simpler, and this is what they do, a much simpler format. And basically what depreciation means is you look at the total cost of something, like say this one, the meters. They paid $1,641 for them. These guys used 25 years instead of the 20, but then you divide the total cost by the years it's expected to live. And that's what gives you this 2016 depreciation number here in the gray column. And that's the number 11,205 that they would put on their annual report form page 4, that 11,205. And I know this, it seems complicated, but what you're going to do is you turn this into the next year is just take those the numbers from this final 2 columns, the book value and accumulated depreciation, you move those over to the previous, they'll become the previous year. And this one that says it's now worth -$1, this one gets removed because it's fully depreciated now. And then I set up the form so then these numbers automatically calculate. After you move these over here, it automatically calculates these last 2 rows of numbers. Okay, next. How to calculate the percentage of diesel generation, fuel efficiency, and line loss. Now you guys are all diesel, so we don't have to do this. How do we know how much diesel you've got? Because it matters what your fuel efficiency expectations are. If you have renewable energy, they think your diesels won't be as efficient, so they make you use a lower number. But the line loss is always the same. And I always, recommend somebody teach middle and high school students, and maybe you guys could go to the math teacher and show them how those numbers are calculated, and then let the students do it every month, because you're supposed to do this and post it around the village for everybody to see so they know their utility is being run properly. But it gets kids involved in the utility. It just, and kids go home and talk. I think it's the best way to get information out is tell a kid, because they'll go home and talk about it. Okay, next. And these are the standards, like see the bottom there, it says for utility that uses diesel fuel to generate less than 80%. That's what happens if you have like wind turbines or a bunch of solar panels. And up at the top, this is the one you guys will use. If you generate more than 80% with diesel, these are the numbers you use. And it's that total kilowatt hours generated by diesel that you then look across to see what's your efficiency standard you have to meet. Next. Okay, now we don't have to do this one because you guys are 100% diesel, so we're not going to bother with this. Line loss. And this is the one where I said, it's like, where did those kilowatt hours go? They're lost. Well, you don't want to lose too many. So the formula is to take the total kilowatt hours generated, subtract station service from that, and then subtract kilowatt hours sold from that, and then divide it by the total kilowatt hours generated. You're going to get a decimal. On this one, it's like 0.059. Then you multiply that by 100% to get the 5.9% line loss, which is excellent. That's where you should be. It's a lot of utilities don't get there until they do a whole distribution system, you know, go through and fix any little issues, but that's where you ought to be. But the RCA will let you go as high as 12%. Next. And now, the easiest way to explain how to set customer rates is to say, add up all your costs, both fuel and non-fuel, and divide by however many kilowatt hours you sold. And that comes up with how much 1 kilowatt hour should cost. Next. So this is the sheet it should be in your set of Excel. It says a practice exercise. And I had the hardest time, like how to make this easily understandable. I don't know that it is, but it's as best I could do. So off to the right, it tells you where you're going to get those numbers from. And do not overtype a shaded cell because I did not protect them. So if you write on them, you've just lost the formula. If you do it by accident, just go up and reverse your action and it'll come back. The formula will come back if you catch it right away. Otherwise, I'll have to help you fix your formula. And I recommend you do these rate analysis every year after you do your annual report. Whether it's going to get reviewed or not, do this to see if you're collecting enough to cover all your costs. And you see that one yellow rectangle in the middle there where it says disallowed expenses? That's stuff that we know the RCA is not going to count. It's not going to count in your PCE calculation, but you should include it in your rate analysis because you spend it. Like if you donate for Christmas, you know, you donate prizes or something like that for Christmas, or you provide food for your office, you buy cookies and coffee, you know, for the utility office. Those aren't allowable expenses. The RCA says that's not useful in the production of electricity. And so they won't let you count those costs. But you should include them in this because you did spend them. Next. And once you've done this sheet, that's when you can play around with the rates and see what it does to your bottom line, because this thing will calculate, the top part of it goes to all your expenses. This bottom half shows how many kilowatt hours you sold to each rate class, what your PCE rate's going to be. And then you can say, oh man, should we keep our, well, one thing you can do is increase your PCE customers' rates, the residential and community facilities. You could increase their rates a little bit because they're getting PCE and it's going to help them. If you do that, then maybe you can afford to give your commercial rates a little bit of a break instead of charging them the full rate. And the school, some people like to give the school a break. But then you can see if you're going to still make enough money to cover your costs and be able to save a little bit. Okay, next. So your PCE rate is affected by your line loss and fuel efficiency. It's determined by fuel and non-fuel costs, and it can be limited by customer rates. Next. And here's an example. This is the page, it's like one of those appendices that the RCA, when you get an annual report reviewed, read those, because the RCA goes in detail through every part of your report that you submitted, what they allowed, what they didn't allow. If your line loss was too high, they'll increase the total kilowatt hours sold so that you meet that expectation. And in determining your PCE rate, they divide the cost by the kilowatt hours sold. So increasing your kilowatt hours sold will decrease your PCE rate. If you've got a low fuel efficiency, they'll say, well, you might think you use this many gallons of fuel, but in reality, you should only use this much. So even though you paid for all that extra fuel, you're not going to get credit for it on your PCE report because you should have been more efficient. And then if you set your rates too low, like I worked for one utility that was owned by a city that had a fish processor. So they got the city collected a lot of fish tax, and they were a dwindling community. The community was getting smaller and smaller, and they didn't want to raise electric rates because they didn't want more people to move. So they kept their rates artificially low so that their customers didn't have to pay so much. So they were paying for the fuel. And I said, you know what? You're a city-owned utility. You can pay for your fuel not using utility money. It still counts. So raise your customers' rates, because as soon as you do, you're going to get a much higher PCE rate. Your customers won't notice the difference, but you will collect a whole lot more PCE Because what the RCA does is they're never going to let you get lower than the current floor. So like, and here on this one, see the little number in red, that 0.1758? This was years ago, that was the floor. And if your rates are set too low, they won't let you go below that. So they'll limit your PCE to keep you from going below the floor. And you can see on this one, these guys, like that 29, oh hell, it's so small, I can't hardly see it. That 29 cents that they were gonna lower their rates to, lost them some PCE. So don't do that. Keep your rates, keep them high enough that you get all the PCE you're entitled to. Okay, is there another slide? I think that might be
No,
it.
that was it.
Okay, oh, now we're gonna look at the exercise that I'm not gonna make you guys try to do while I do, because I discovered I don't do well on Zoom doing that. And it's hard for you guys to do, it takes a long time. So Bertha, you let me know when I can look at my screen.
Okay. Do we have any questions from Tuluksak or Napakiak?
Yeah, I tried to talk maybe fast because I didn't want to, uh-oh. Oh no, I did something wrong. I hope I don't stop the recording. Oh good, I didn't. Okay. All right, can you make my screen, or, oh no, it's me now, right? Share screen, this will, you want to do this? Yes, I do. Oh my God, what have I done? I'm trying to show this. Can you see that spreadsheet right now? Or that's the end of yours, isn't it? I'm sorry, I'm not on share screen. Yes. Oh, there it is. Okay, can you see my screen now?
Yes.
Yeah, all right, okay. So here's where I want you to, did you guys print out those, the data for the exercise? It was an Adobe PDF. Because that's where the answers to this come from, and I just want you to see. Did you guys print it out or no? You didn't? Oh, well.
It was the last email that I sent. It had, I think, 2 attachments. It was a forward from Connie.
Yeah, it's only the PDF. It's 5 pages that I wanted you to print out. It'll really help you if you do that. I should turn my Outlook off so we don't have to keep looking at my emails as they come in. Okay, let me know when you guys are ready with those 5 pages. Hey, did we lose Tina? I don't see her on here. Oh no, she's still there. I see her now. And same with the PowerPoint we just went through. If you guys have any questions as I go through this, just stop me right then, or do the chat thing. Oh, just so you'll know, what I did was there's this page you guys have in the Excel form that goes through and tries to explain everything. And then there's a page for you guys to practice doing it. But what I'm going to do is just go through the answer key right now. And we're pretending that this is that it's the end of 2020, that it's next year, and your reporting year was from January through December, and we're pretending it's January. So we're looking back at your 2020 expenses right now. Hey, Bertha, did I send you a whole bunch of spreadsheets that I have a instruction book for utility clerks. I should send you that whole thing to send your folks, because it's pretty useful, but it's big. So I don't just send it to anybody. I don't want to clog up their internet or their email, you know, with a thing that won't download. Are we still waiting for the
You could
printout?
send them to me, but I think everybody ready?
No, I think you got them now? Kayla? No, not yet. They're still waiting for the printouts. Hey, Tina, do you have your printouts?
Tina said yes on the chat.
Oh, okay. I've lost being able to see the chat. Maybe that's because I'm
You
full.
have to just maximize it. You have to click on the top.
Oh, it'll show up there.
Yeah, you have to open it back up.
Oh, I'm afraid I'll disappear if I do something.
Christy and Kayla, are you guys still? With us?
I hope she's only printing the data for this, the 5 pages. So Kayla, do you guys still have the ampy meters there in Tuluksak? The prepay? Oh, good. It's working good for you. Good. I swear those things have saved more utilities and they no longer make them. So there's no more left. That really hurt. I wish I knew how to make meters. I would make more of them.
What's the lifespan on a meter?
Well, those they figure 10 years instead of 20 because they have, you know, like timing crystals and things in them that other meters don't have that can wear out, and there's software things in them. So their lifespan is expected to be 10 years. We've had them last longer though, but still it's like as they start to die now, there's nothing left. Clarissa bought every last meter from the United Kingdom where they were made. But they've moved on to smart meters because they say that's what everybody wants now, not these card tied meters. Well, in rural Alaska with poor internet many places, card tied is what works. And we love the card tied ones, but they've moved on.
Do other communities have smart meters, or do you know of?
Yes, some do. I know that all the intelligent energy system communities, they have smart meters, and some of them removed their prepay meters because they, you know, they could only have one meter. And that's why we're recommending dual meter bases in communities with prepay so that they can continue to use their prepay meters, but that the smart meter is not really a smart meter, it's for those heaters, those electric thermal stoves. Yeah, rather than going to a smart meter. There is a company that makes a prepay component, some software that can go on a smart meter, but it's really expensive. It's meant for large utilities, and our small utilities, the price per customer would just be exorbitant, and it wouldn't, nobody could afford them. In AMPI, they were making smart meters and supposed to have the prepay component included, and they've never done it yet. It's been 5 years. They've been working on it, and they finally just decided not to even do it. I don't know why. It seems to be too complicated to do with a smart meter or what, or too expensive. Maybe that's the problem. Yeah.
Interesting.
Kayla, what happened to her, your partner? Did she have to go to another office?
They are trying to get the papers printed out right now. Yeah.
Just doing that 5 pages, right? The one PDF is the only one needed printed. Okay. So these numbers on this are actually from a real utility. I didn't say who they were, but these are actual numbers. I can't even remember who they're from right now, but. So Bertha, what's your picture? Is that Bethel and Napakiak? What is that?
Oh, it's St. Mary's.
Oh, it's St. Mary's.
Mm-hmm.
That's where you came from?
That's where I'm from.
Ah.
Should we just get started on this one?
Yeah, I hate to leave out the folks, but yeah, we're gonna run out of time. Okay, I'll get started. So the first thing you do is start entering all your costs from your annual report. And these numbers come from page 4, the income statement of the annual report. So they're gross wages, the taxes that are paid on those wages. And the RCA wants you to include stipends in with this gross wages, and they want you to take taxes out. Some places don't do that. If you don't, you put it on page 4A as a miscellaneous G&A expense for stipends. This one here does include stipends. And you know, stipends are for the utility board members, right? Every time there's a utility meeting, folks pay their board members a certain amount. That's a stipend. And workers' comp, the RCA would prefer you put workers' comp up here. This utility didn't. They just lumped all their insurance together in QuickBooks. And that's okay too, but the RCA is going to look at all your invoices for insurance to see that workman's comp's included in there. Then office supplies, postage, office rent. This utility did not travel or do training because of COVID. So there's no money there. They had no bad debt expense. RCA fees, it's $471 when they review an annual report and $39 every time they review a fuel report. So those in your QuickBooks, your chart of accounts, you should have a line item for RCA fees and put them on that line. Other expenses, and I just add them all up. This is going to add up how much your G&A costs. Over here, they spent this much money on generator oil, generator filters. Now their repairs and maintenance, this $29,000, that's a pretty high number. Brenda's going to say, show me all your invoices for that. And if it was for a lot of repairs that are like were needed that year, that the results aren't going to last for many years out, she'll let you expense them. That's what you really want to do, is expense the repairs, because it increases your PCE rate. If you have to depreciate them, you know, it spreads the cost over several years. So you get the biggest bang for your buck if you put them on this line. But then you have to understand that if you didn't get reviewed this year and you didn't put things in depreciation that could have been, the next time she reviews an annual report and you go, oh, wait, I spent $20,000 on this part that is still functioning and I want to put that on my depreciation now, Brenda may or may not let you. I've seen it go both ways. It seems like there should be a standard response to that, but there isn't. And years ago, the person who taught me to do PCE said, just put everything as an expense and let the RCA depreciate it if they think it needs to be. Well, I learned the hard way, no, don't do that. Put it on depreciation. If you're sure she's not going to take it as an expense, put it on depreciation that year so that you get to count it the next time you do have a review. These guys didn't buy any tools. They didn't rent any equipment. And then their other is, you know, they bought distribution system wire, they bought coolant, cleaning supplies, that sort of thing goes in other for operating expenses. And then this number up here, non-fuel costs, the $317,519, that's the personnel plus general and administrative plus operating expenses plus interest and depreciation. And all of that gets added up into this number. And that's the number that if you're going to try to predict your PCE rate, you want to look at that number. Plus down here, we did fuel costs. They used 125,304 gallons. The number, a lot of people on their annual report will put, well, we ordered this many gallons of fuel at this price, and that's the number they'll put on page 4 for fuel expense, but that is not what the RCA is going to use. They're going to use the number of gallons times the most recent weighted average cost of fuel per gallon from your most recent fuel report. So that's the number they use. And then they'll come up with a number for the gallons of fuel, the cost of fuel based on that, not how much you bought that year. So then this number down here, it adds up all those expenses up here. It's got the non-fuel expenses, fuel expenses. I'll add it up into this. Oh, there's the papers. Okay, so just so you know, ladies, that first page that shows the income statement, that's where the numbers came from that were used on the top of this sheet. Okay, so now we're going to look at what would the PCE rate be before we go down and start playing with the rate analysis. So using the numbers from this page, up here, total kilowatt hours generated in diesel. This utility has wind turbines, but you don't put the kilowatt hours generated by wind up here. The RCA won't do that. And it makes it look odd. It's like, wait a minute, how could we sell more than we generated? Well, you had wind kilowatt hours, but they use this to generate your fuel efficiency. So they only put the diesel kilowatt hours up there. And then this over here, don't include the things they're not going to count. I know a lot of folks will throw the kitchen sink at their expenses, trying to get as much as they can, which gives the RCA a hard time because now they have to go through and disallow things. So we already know what they're not going to count pretty much, the food things we buy basically. So just subtract those, or if you donated, you know, for a holiday event, 4th of July prize or something. So you put your non-fuel costs, and then what the RCA does is divide the non-fuel costs by the total kilowatt hours sold. And here, this 0.1933, that's your non-fuel costs per kilowatt hour. Now over here, what the heck? We used 125,304 gallons of fuel. Why did the RCA do this? They reduced it to 103,508. Well, it's because the fuel efficiency was too low. This utility generated more than 1 million kilowatt hours to make their diesel, to make electricity using diesel. They generated over 1 million kilowatt hours. So their fuel efficiency minimum is 12.5. What the RCA will do is take the total diesel kilowatt hours generated and divide it by 12.5 and say, you really should have only used 123,508 gallons of fuel. So up here, when they're calculating your PCE rate, that's all they're going to let you count. So you paid for all those other gallons of fuel, but you're not going to get any credit for them on your PCE rate because your fuel efficiency was too low. That's why you want your operator to change fuel filters regularly and make sure there's no water in the fuel. And then make sure the generator is running properly. If you've got poor fuel efficiency, which you're tracking monthly on your PCE spreadsheet, that year-to-date spreadsheet. So you tell them right away, we're going to lose PCE if you don't fix those generators. Okay, so then that's how they changed your gallons used to a lower amount, multiplied by the most recent weighted average price to come up with the fuel cost. So down here, this 0.2587 is how much you spent the fuel cost divided by the kilowatt hours sold gives you this 0.2587. And then down here, they add up the fuel costs and the non-fuel costs and come up with 0.4520. Now you don't want to charge any less than that for your power, because otherwise you're going to lose PCE because you'll go below the floor. And you don't want to do that. You want to get all the PCE you can. So now they subtract the base from your costs to come up with this. And they change this number every year on July 1st. And what the floor is the average cost of the rail belt utilities like Fairbanks, Anchorage, Homer. You know, they'll divide that. I mean, they'll add that and they'll and Juneau. Juneau has all hydro. So they combine those two to get this floor. And you can't go any lower than that because that's the average price for the rail belt plus Juneau. You're not allowed to go lower than them. One year, I can't remember how many years ago it was, Juneau's hydro broke down and they had to use diesel all year or for a big part of the year. Holy cow, the floor went way up, which hurts rural Alaska. So when urban Alaska fails to generate efficiently, it hurts everybody in rural Alaska too, because this floor number will go up, meaning that you can't pay less than that. And then down here, you've got your, this is where you enter your costs. And I entered two different ones, it's thinking, oh, let's lower the community facility rate, you know, just so that our community facilities don't have to pay so much. And you can do that if you want. You're non-regulated. As a non-regulated utility, you can make your customer rates be whatever you want. You don't have to justify them, but you do have to notify the RCA that you're changing your rates. And they hope you'll do that 30 days in advance of actually making the change. And then you folks with the AMPI meters, be sure when you do make that rate change, I enter it a month ahead of time and have it set to take, you know, to start on a certain date, like the first of the next month. That way, as people come in with their cards to put money on them, that information gets transmitted to their meter. And that way you don't have to run around with penny cards changing rates, you know, as you do meter readings, which is what happens if somebody doesn't come in to get power. Between the time you've decided to change your rates and the time that the rate change is supposed to take effect, if they come in to buy power, yay, you don't have to do a penny card at their house. If they don't, you got to keep track of who did not come in to put money on their card and be sure you go to their house and run a penny card to change the rates in their meter.
Connie,
So,
for my,
yeah.
would you explain what a penny card is? I'm not tracking that.
Oh yeah, only the AMPI people know that. A penny card, when we set up the AMPI system in the office, you make a card for every customer, but then you also make what's called a penny card. It's a exact same kind of card, but it's got their name on it. So that during these rate changes, if they didn't come in to change their rate or, you know, to put money on their card so that that rate change information gets transmitted to their meter, you take that card out when you go to read meters and run it through their customer information unit, the device that hangs on the wall in the house with AMPI meters. And you just run that card through there so that rate change information gets transmitted to the meter on the house so that it has the correct rates on the correct day. And we just
Maybe a
call it
step-
penny cards.
As an aside to that, has COVID impacted the ability to go and read meters or like do things with those AMPI meters in the homes? Has that been a challenge?
Boy, I would think you could get around it because you read the meters from the outside of the house. But the penny card thing, I guess you could just go to the door with a mask on and hand them the card, let them do it, and then bring it out to you. It's real easy. When the rates go down, people are happy to let you change the rates. But when the rates go up, sometimes people lock the door and don't be home so that you can't get in there. So, I mean, there are sometimes issues. Have you folks in Tuluxac had any issues with meter readings since COVID? No? Good. Yeah, usually people come at least once a month to put money on their AMPI system. That's the wonderful thing about AMPIs is you don't have to pay everything all at once. It's like, hey, you dig 20 bucks out of the couch cushions, you go put some more money on your AMPI. You know, it's like, and you can go every week if you want, or every day to put a little bit more money on it. And it's not like you have to pay everything all at once. So usually you don't have to do penny cards. And we call them penny because you have to put a penny on them. They don't work unless there's some money on them.
And some communities have been getting assistance from the government on their bills during this COVID time.
Right.
So I'm guessing they're paying utility, the bills for, I don't know how long.
I know some folks have said everybody gets 500 bucks or, you know, something like that. And then, yeah, they enter that into the AMPI system and they can either run a penny card through that person's CIU, or the person comes in and brings their card and gets that information imprinted on it. You know, you could put out a message to everybody saying, hey, bring your card in, we're going to put some money on it. I bet you'd be stormed by folks coming in to get that money put on there. So what you can see down here, this is where the PCE rate gets determined. You know, running it through, there's all kinds of calculations on this sheet. But by the time you get down to here, this is what the PCE rate is. And this is what the customer is going to pay. It's the full amount minus the PCE rate. This is what the customer pays for the first 500 kilowatt hours, or for community facilities for all of their hours, all of their kilowatt hour usage. But because we lowered the community facility rate to 43 cents, the PCE rate went down because they went below their cost up here. This 45 cents, they made 43 cents. Well, that was less. So they don't get all the PCE because they would go below the floor. It just stops them at the floor. And that's why I say, you know, make sure that you're not going too low, which isn't a problem for most places that they go too low. Okay. Oh, I think I can't remember. Did I tell you that what happens if you have high line loss? If your line loss is more than 12%, what the RCA will do is calculate how many kilowatt hours you should have sold to get the right level of line loss. And so they'll increase this number. And watch what happens if I think, oh geez, I thought I turned my internet off. If say that the line loss was really high and they have to increase this to like 18,000. First, pay attention. The PCE rate was 2334 and 2237. Which what happens if I have to change this to 18,000 because we had really high line loss? Oh no, the PCE rate dropped to 1960. So it makes a difference. You know, keeping account of your line loss really matters. Okay, so now I'm going to reverse that, take that back, and then go back to this right here. This is your rate setting part, the bottom of here. And this is why I say always, oh no. Whoa, okay. keep track of how many kilowatt hours you sold by rate class. I know that the people don't always do this. And it just really makes a difference when you're trying to do a rate analysis if you want to play around with rates. Like this side of it shows, oh God dang it. I don't know how to do this without, there. This is what is right now. So if they don't change their rates, they know what their PCE rate's going to be. They know what their customers are going to pay. They're collecting enough money. This difference down here is the total that they collected, that 770,000 minus their total expenses. So this thing down here will automatically calculate for you. Well, 21,803, that's significant money and you should put that in your savings account because that's the money you're trying to save to repair things when you need a chunk of change. Or you could use it to contribute if you want to get a fuel project, what do they call it? Power project loan from AEA, but you have to have some skin in the game. They'll ask you for some money too. You can use that money for that. Or if you're going to get a grant and you need matching funds, you can use it for that. Also your depreciation number, that's money you should be able to save because you've already spent that money and you're still getting credit for it in PCE. So you should be able to save some of that as well. And you definitely want to have a savings account for your utility so you're prepared if something goes wrong. And, you know, especially now with the state running out of money, it's like they're not going to always be there to come save people with a new generator or, you know, big repair project. But so this is what is. So we know we're good. People are paying $157.33 if they use 578 kilowatt hours. Okay, over here, this is like the play around with it part. Oh, they dropped their rates to 43 cents for everybody. And now everybody's paying the floor. Yo, that's pretty good, except, whoa, the utility's losing almost $50,000. How long you gonna last as a utility if you're losing money every year? That's a problem. In the past, because the state would come rescue people, it was not as big of a deal. But these days, it is a big deal. So then you go, well, okay, maybe we could raise these guys up. So let's put them to what it used to be, this 0.4741. And let's make the community's facilities 0.4741. Oh, now we're only losing $12,000, almost $13,000. We're doing a little bit better. And that PCE rate here would change. Once you raise their rates up, this is going to change to what it was for these guys over here. And I can't see it anymore. What was it? 2334. Okay, so now we're back. The PCE customers are paying exactly the same amount, so they're not going to complain. But let's look at these other rates. We're going to have to raise somebody up. Who should we raise? Oh, I go to federal state first. I don't, you know, that money's coming from the federal government, like FAA, DOT for airport stuff. That's what, and the post office. So let's put them back up to 4741. Oh, now we're only losing almost $8,000. Rats. Well, then you start looking at who else could we raise up here? Do we want to raise the school or the commercial things? Because commercial's your store. And if their rates go down, hopefully they would reduce the prices in the store. So maybe we'll let them stay low. And the school, that's also kind of paid by the state. So let's raise them up to 45 cents. Oh, now we're only losing a couple thousand. Maybe we raise commercial up a little bit. oh, now we're making some money. So here's the part where you have to decide how much of a money do you think you need? Do you want to leave your commercial facilities at a lower rate or what? You know, you can play around with this. And if you, some places I've worked with will even go through each month and figure out how many of their residents used more than 500 kilowatt hours. And then you can make that a lower rate. Instead of charging them the whole 47 cents when they go over 500, you could charge them less. And that utility I gave as an example that used, or that had such low, artificially low rates, when they raised, they went from 32 cents to 90 cents. They made their rate 90 cents, but their PCE rate was so high that the customers still paid the same rate, except if they went over 500, then it would go to 90 cents. Ruh-roh, people will leave town if that happens, because these folks were using a lot of electricity out there because their rate was so low. So you can drop the over 500 kilowatt hour rate to whatever you want it to be. You can drop it back down to this 47 cents or to the 2407, you know, the PCE rate. And that's what that community did. They dropped their rates down to the lower rate. And you can do that in an AMPI system too. You can have a dual rate after so many kilowatt hours. But this is the part where you play around with your rates and try to decide how much can you live with down here for your estimated revenue difference. And another point I want to make is this revenue is dependent on everyone paying their bills. So, you know, that's the other thing you have to consider here. It's like, oh, our community facilities never pay their bills because they're owned by the same entity that owns the utility. Well, that's a bad idea because you're leaving PCE. The state would help you cover the cost of those guys. If you just paid your bills, they would help you. And so it makes sense to pay those bills, get PCE on it. And, you know, I mean, yeah, it just makes sense to do that because otherwise this rate analysis doesn't work unless you put 0 here. And if you do that, what's going to happen? Like these guys just don't pay. So there you go. Oh no, now we have to raise everybody's rates in order to make up this difference. These guys would have to go way higher. Nope, not that high. 0.50. Oh no, that didn't help at all because they're not paying. Well, you're gonna have to raise everybody. Okay. But now you see the difference is what everybody has to pay because one rate class isn't coming through for you. Okay, any questions? I think that's about all I got. Hey, when are your annual reports due to LUCSAC folks? When is are you working on an annual report now or did you just turn one in?
We're working on starting an annual report that is due for LUCSAC.
Okay, well, if you guys need any help, Bertha has offered 5 hours that I can help you at no cost to you. So if you need any help, I'm happy to help you with that.
All right.
How about you, Tina? Are you guys working on an annual report? Oh, she has to. Let me get out of screen sharing so I could see the chat box. Oh. Yes, that's what we do. Oh, good. Yeah, LUCSAC did a good, they went around with a mask and face shield, and if they had to change a card out, or enter a penny card, they gave them and had them do it inside and then just hand the penny card back. And Tina, I don't know if you can still hear me, but if you have an annual report you're working on, I can help you now at no cost to you, thanks to Bertha and New
Thanks
Vista.
to CEMAI program. Are you guys able to see my screen? I can't.
I see the chat box now. I don't see your screen. I just see the people's faces, the Brady Bunch thing. I'm trying to read your bulletin board behind you girls. It's too hard to see though. Okay, and Tina says she'll send me an email. Okay, so Bertha, do you have any questions or comments to finish up here? Because we got 7 minutes left according to my phone.
I'm trying to get back to the slides where we left off.
There you go. I see it now.
Okay, I just wanted to mention the sustainable energy classes UAF Bristol Bay campus is offering next semester. The UAF Bristol Bay campus has tuition assistance available for those of you that are interested in taking classes. They're available online and by phone if you're able to join. I took these courses last year and they were pretty good.
You did all of them?
I took most of them.
Wow, energy and
intro-
society. That looks interesting.
So Mark Musteller is the one to contact. His information is on the slides. His email and phone number are on the bottom. So I highly recommend taking these courses. It's the Sustainable Energy Occupational Endorsement Program. It's a certification course for rural Alaskans in the energy field. And then CEMAI is offering, we're continuing our Zoom and telephonic court classes. The O&M for rural power plants will be in January, and the renewable energy systems and electricity session will be in February. You could register online on our website. It's cemai.calistacorp.com. Click on calendar. And we'd like to thank our partners, Department of Energy, Indian Energy, Calista Corporation, New Vista, ANTHC, AHFC, CCHRC, and then Deerstone. And for the communities that are taking part in this class, the training, we're offering 5 hours of free technical assistance on behalf of the CEMAI program. Connie's contact information is on the handouts that I sent you. Her email and phone number are on there as well.
Hey, and Bertha, what's the deadline for this in case their annual reports aren't due right away?
We don't have a deadline. It's just the 5 hour max. That's a good question.
Yeah, when does your grant end? That's what I guess would be the deadline.
Well, up until September of 2021, but we'll clarify that with you by email.
Yeah, everybody's annual reports are due at different times. So
Why
that,
is that?
so that Brenda Cox doesn't get overwhelmed with everybody's all at once.
So each community has different deadlines?
Yes, for fuel reports and annual reports.
So what does, so Napakiak and Tuluksak, when are your reports due?
We have one that's due that we need to submit.
By when? When was it due? What's your reporting year? Like,
I have to look into the email to remember when it was due.
are you overdue now?
A little bit, yeah.
Oh, okay. Did you send them a letter asking for an extension?
We forgot to do that because we've been updating ledgers.
Yeah.
I got laid off due to COVID while I was pregnant. That's why we're a little late.
Yeah. You could just send them a letter and say that you know, due to COVID, you're going to be late getting in your report. And that way they won't cut you off PCE, because they'll send a letter to AEA and say, cut them off. They didn't do their report. And then she'll give you an extension.
Tina says their field reports are due quarterly. And the
Yeah.
annual is in March.
Okay. Yeah, they just buy power. They don't really buy fuel. So they do a fuel report just to show how many kilowatt hours and at what cost they purchase power from Bethel. They're different. I keep asking about our fuel efficiency, and then it's like, oh wait, you don't have generators. I always forget.
So we're right on the 12, almost the 12 o'clock hour. I'd like to thank Connie and Tina, Christy, Kayla, and Tashina for joining us. If you have any questions, just feel free to contact any of us by email or by phone.
Thank you.
You're welcome. Thank you.
Ayana.
Thanks, everyone. Good to see you guys.
Merry Christmas, happy holidays.
Same to you, Bertha.
Okay, we'll talk to you again.